Nifty faces a massive 176-point breakdown target today if a key level breaks. Get ready for volatility on Trade Vision pre-market report. Good morning, traders. Welcome to Trade Vision pre-market report. Today, 2026, July 16th, Thursday, promises another vibrant, warm and positive trading day. It is Sensex expiry day. Let us deep dive into the detailed reports. Fresh US and Iranian military exchanges over the critical Strait of Hormuz have pushed Brent crude futures significantly above the $85 per barrel mark, igniting renewed energy supply and inflation fears across global markets. This geopolitical flare-up could weigh heavily on India's import bill and current account deficit, leaving room for caution in oil-sensitive sectors like aviation and logistics. China's economy recorded its slowest growth in over 3 years, with second quarter GDP expanding at an annualized 4.3%, falling short of market expectations. This subdued data raises the prospect of additional stimulus from Beijing, which may lend some support to global commodity prices, but could temper sentiment for Indian exporters reliant on Chinese demand. The US administration is reportedly preparing new import duties, potentially ranging from 10% to 12.5%, targeting several key trading partners including India, Japan, and China, over concerns about lax enforcement of anti-forced labor laws and excess industrial capacity. This development puts the spotlight on Indian export-oriented sectors, particularly those with significant US market access, and leaves room for trade policy uncertainty. US forces have reimposed a naval blockade on Iranian ports following renewed attacks, with Tehran threatening to close all regional energy export routes, escalating tensions around the vital Strait of Hormuz. This sharp geopolitical flare-up, which sent Brent crude surging, casts a shadow over global supply chains, keeping the spotlight firmly on energy importers like India and potentially fueling inflationary pressures across the broader market. A massive, coordinated global IT outage, attributed to a sophisticated cyberattack, has paralyzed critical infrastructure worldwide, hitting major financial institutions and international airlines. The disruption significantly impacts digital banking and UPI transactions within India, putting the spotlight on cybersecurity firms and potentially weighing on sentiment for technology and financial services sectors as businesses assess system vulnerabilities. Economists warn a super El Niño developing this year threatens to cause a severe shock to global food prices lasting into 2028, exacerbating existing supply chain woes. With parts of India already experiencing deficient rainfall, affecting key crops like wheat, rice, and sugarcane, this weather phenomenon could lend upward pressure to food inflation and put the spotlight on agricultural and FMCG sectors.
You are watching Trade Vision! Smash that subscribe and enable the bell button right now. Like and share this video. Come and show love and share your happiness. Let's win together!
Foreign investors sold 735.83 crore rupees. Domestic institutions bought 704.93 crore rupees. This offsetting action means a largely neutral market impact today, with domestic buying cushioning foreign selling pressure. If we look at yesterday's sectoral data, we clearly see money rotating out of defensive Nifty FMCG and Nifty Metal, which are showing weakness in both daily and weekly trends. Conversely, capital is flowing into cyclical Nifty Consar Doorbell and even Nifty IT, suggesting traders are positioning for continued momentum plays in these strengthening pockets. Let us look at global events. India's Consumer Price Index for June 2026, released on July 13th, came in at 4.38% year-on-year, beating the street's expectation of 4.30%. The Reserve Bank of India's Monetary Policy Committee is set to meet from August 3rd to 5th, 2026. This upcoming meeting will determine key interest rates and policy stance, directly influencing India's banking, auto, and real estate sectors, and shaping overall market sentiment. The United States Consumer Price Index for June 2026, released on July 14th at 6 p.m. Indian Standard Time, showed a 0.4% monthly decrease, missing expectations. This softer inflation data is positive, potentially reducing Federal Reserve rate hike pressure and encouraging foreign investment into India. The United States Producer Price Index for June 2026, released on July 15th at 6 p.m. Indian Standard Time, declined 0.3% monthly for final demand, in line with forecasts. The U.S. Federal Reserve's policy meeting is scheduled for July 28th and 29th, 2026. The crucial interest rate decision and forward guidance will be announced on July 29th at 11:30 p.m. IST. Global markets saw mixed sentiment. Hong Kong and US tech gained, but South Korea and Japan plunged. India's positive gift. Nifty suggests a firm open, but major Asian declines warrant caution. Now let's move on to some stocks highlighted in today's news updates for significant market action. KEC International is in focus after securing new orders worth 1,180 crore rupees across its various businesses. HDFC Asset Management Company reported robust first quarter results, with its net profit jumping 12% year-on-year. ICICI Prudential Life Insurance Company also announced strong first quarter performance, seeing its profit after tax rise 28%. Waaree Energies could see pressure following a brokerage downgrade by UBS, which cut its target price to 3,100 rupees. Lastly, SG Mart is on investors' radar. Let's check what the RAS levels are signaling for the Nifty today. We're looking at a breakout level of 24113 and a breakdown level at 24085. Should the Nifty turn bullish, resistance levels to watch are R1 at 24218, R2 at 24322, and R3 at 24427. Conversely, if the market becomes bearish, supports stand at S1 23980, S2 23876, and S3 23771. Today's CPR is defined by TC at 24115, the pivot at 24103, and BC at 24091. Analyzing the options matrix and derivative distribution, we observe the Nifty's July 21st expiry build-up anchored precariously at the 24,100 max pain point, amidst a notable deterioration in the put-call ratio from 0.775 to 0.744, reinforcing the prevailing bearish directional bias. This implies aggressive call writing at the 24,200 resistance wall, while 23,000 remains the resilient put demand zone, suggesting institutional unwinding below 24,100 could trigger a significant breakdown towards 23,000 or a short covering rally towards 24,200 if the 24100 pivot holds. The India VIX is currently at 13.27, showing a 3.49% fall from yesterday's close of 13.75. The 5-day trend is mixed, indicating low volatility. With Nifty at higher levels, this falling VIX suggests reduced caution, potentially implying continued stability for Nifty. The CPR is positioned at TC 24,115, pivot 24,103, BC 24,091, expecting normal movements in the market today. Gift Nifty opened at 24,114, marking a 72 points gap up from Nifty's previous close of 24,042. Nifty 50 tends to track this gap direction, suggesting a potential gap up open today, which traders should confirm. The no-trade sideways zone is identified between 24,085 and 24,113, where the market is likely to move without clear direction. A move above the breakout level of 24,113 could yield 135 points, reaching 24,248. Conversely, a move below the breakdown level of 24,085 could yield 176 points, reaching 23,909. Previous trading day, Nifty moved minus 7 points, indicating a bearish session. The weekly move stands at 39 points and the monthly move at 181 points. The close did not sit tight against either extreme, so there is no strong directional carryover signal into today's open. And now the moment you've been waiting for, today's final market verdict. We are seeing some mixed signals today. Nifty futures registered a long build-up, with open interest climbing by over 107,000 contracts. However, the futures are trading at a discount to the spot Nifty. On the broader indices, both Nifty and Sensex are currently below their breakdown levels, with Nifty also below its 200-day exponential moving average. The options market reflects a bearish sentiment, with a put-call ratio of 0.744 and significant call writing at the 24,200 and 25,000 strike prices, indicating strong resistance. While domestic institutions bought over 700 crore rupees worth of equities, foreign institutional investors sold over 735 crore. Globally, despite a positive 72-point gap up in GIFT Nifty, major Asian markets saw sharp declines and several negative global events, including rising crude oil prices and trade tensions, present considerable headwinds. Although our proprietary RASEMA trend signals are largely bullish for all indices, this contradicts the bearish index biases and options data. Weighing these signals together, the market appears to be facing substantial downward pressure and caution is warranted. And that wraps up today's Trade Vision pre-market report. Don't miss a beat, subscribe to our channel and hit that notification bell for daily updates. If you found our insights valuable, please give us a thumbs up and share this video. We love hearing from you, so leave your thoughts and suggestions in the comments below. May your trades be wise and your day abundantly prosperous.